Whenever it appears on the asset side of the balance sheet, it means that it is a loss. Out of that, we need only 300 rupees. So provision for tax account debtor 300 to reconstruction account 300 being provision for tax used for reconstruction. Rupees 10 equity share capital account debtor 40,000. So this is the old capital. Now to new equity share capital account. So that is 4,000 into 4. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Aid College, Temple of Excellence, MYSURU. I welcome you all to this session. In this session 3 of Unit 3, we will be working some more problems on capital reduction. The following was the balance sheet of Aroma Limited as on 31st/3/2011. So we have the equity shares of rupees 10 each. So 2 lakhs. Suppose the 2 lakhs is the equity share capital. So the number of equity shares will be 20,000. Then paid up capital 12,000 equity shares of rupees 10 each, 1,20,000. So this is the paid up capital here. So from this, we are deducting the calls in arrears. Now, what do we mean by calls in arrears? Calls in arrears means that it is the call money which is pending, or the shareholders, some of the shareholders have failed to pay the call money. So that call money which has not been received by the company, that we will be calling it as calls in arrears, 9,000. So out of 1,20,000, the company is yet to receive 9,000 rupees. So as such, the actual paid up capital will be 1,11,000 only. So what is the calls in arrears here? 3 rupees per share on 3,000 shares. So on 3,000 shares, at the rate of 3 rupees per share, the shareholders have to pay to the company almost up to 9,000. Then provision for tax, that is 4,000. Creditors, it is 15,425. The total is 1,30,425. Now, coming to the asset side, we have land and buildings. So, the value of land and buildings is 20,500, plant and machinery 50,850, goodwill 10,000, stock 10,275, debtors 15,000, then cash at bank 1,500, preliminary expenses again 1,500, profit and loss account 22,000. So this is the loss of the last year, previous year, and the profit for this year is 1,200. So whatever is the balance remaining, the loss, it has been written to the outer column 20,800. So the total is 1,30,425. Now, next we have the additional information. The directors have had a valuation made of machinery and found it overvalued by rupees 10,000. Now, what is the value of machinery given here? The value of machinery given is 50,850, and the directors feel that this 50,850, the value of machinery, it is been overvalued. So, 10,000 is overvalued. So, the machinery value has been overvalued by 10,000, and it was agreed to write down this asset to its true value. So, they want to bring down the value of the asset by rupees 10,000 and to write off deficiency in the profit and loss account. Now, if you can see here in the balance sheet, there is the profit and loss account is mentioned on the asset side of the balance sheet. So, whenever it appears on the asset side of the balance sheet, it means that it is a loss. So, there is a loss of 22,000. So, the profit for this year's profit is 1,200. So, the remaining loss is 20,800. Now, the company wants to write off this loss. So, this loss of 20,800, whatever has been shown in the balance sheet, it has to be written off. So, they are writing off the machinery. They are also writing down the profit and loss account, goodwill. So, goodwill also has to be written off, and preliminary expenses by adopting the following course. So the preliminary expenses also has to be written off. So what is the course of writing off? The first one is forfeit the shares on which the call is unpaid. Now what do we mean by forfeiture? Forfeiture is nothing but cancellation of the shares. You are cancelling the shares. Now on how many shares do we need call money calls in areas? So on 3000 shares. So 3000 shares we have to cancel. So forfeit the share on which the call is unpaid. So we are cancelling the 3000 shares on which the call is unpaid. Then reduce the paid up capital by rupees 3 per share. Now what is the paid up capital here? So if you can see again, go back to the balance sheet. The paid up capital is rupees 10 each. So rupees 10 rupees per share they have already collected. But now they are reducing the paid up capital by rupees 3. So 10 rupees minus 3 rupees. So this will be 7 rupees. 7 rupees per share. So we have to just bring down the paid up value to 7 rupees by reducing 3 rupees per share. Then reissue the forfeited share at rupees 5 per share. So whatever the shares we have forfeited, so we have forfeited 3000 share. Now these shares have to be reissued. So they are reissued at rupees 5 per share and utilize the provision for tax if needed. So if the money is short, then we can always make use of the provision for tax they have told. So we have to give an effect to these transactions. Now let us see here. So journalize the above transactions, draw the reconstructed balance sheet of the company. So we have to pass journal entries for forfeiture of the shares and reducing the share capital and also reissue of the forfeited shares and also for writing of the losses. Now, first entry will be for forfeiture of shares. So, whenever you are cancelling the shares, the share capital has to be debited. Share capital account debtor 3000 into 100. Now, we have not received the call money on 3000 shares. So, this 3000 shares has to be reduced. So, we will be reducing that 3000. So, 3000 into 10 that comes up to 30,000. Then, calls in arrears 9,000. See, on 3,000 shares, 3 rupees is pending. So 3,000 into 3, it is 9,000. And forfeited shares account 21,000. So being forfeiture of 3,000 shares. So we have cancelled the 3,000 shares. The next one, next entry will be, so we are reducing the paid up value of the share capital from 10 rupees to 7 rupees per share. So the old capital, whatever is the old capital, so out of 12,000 shares, only 9,000 shares are remaining now. So we should understand how we got this 9,000. So 12,000 shares have been issued. Out of this, 3,000 shares are cancelled. So what is the remaining number of shares? 9,000. So 9,000 into 3. So we are reducing that money. So 9,000 into 3, 27,000. To reconstruction account 27,000. So on 9,000 shares, we are reducing 3 rupees per share. So that comes up to 27,000. So that 27,000 is being credited to reconstruction account, being reduction of paid up capital by rupees 3 per share. Now, so you can write this entry in this way, or also you can write, so the old capital account debtor. So what is the old capital? So that will be coming up to 9,000 into 10, that is 90,000. To new capital. To new capital will be 9,000 into 7. So that will be 63,000. And to reconstruction account. To reconstruction account 27,000. So old capital to new capital to reconstruction. So in this way, where the credit to reconstruction goes to exactly 27,000. So both are correct. Whether you write this journal entry or this journal entry, both are correct. Ultimate effect is the reconstruction account should be credited by rupees 27,000. So being reduction of paid up capital by rupees 3 per share. So this is how we have to write the journal entry. Then the next one will be, we are reissuing the forfeited shares. Now the 3,000 shares which has been cancelled, the company has decided to reissue the shares at rupees 5 per share. Now we have 3,000 shares at the rate of 5 rupees each. 3,000 into 5, it comes up to 15,000. Forfeited shares account debtor. Now what is the actual value of the share? So the paid up value of the company has been reduced to rupees 7. So the company has already collected 5 rupees from the shareholder. Now what is the amount pending? Amount pending is 2 rupees. So that 2 rupees we will be debiting from the forfeited shares account. So forfeited shares account debtor 6,000. To share capital account 21,000. Why? The actual paid up value is 3,000 into 7. 7 rupees per share they have to collect. So 3,000 into 7 is 21,000. So they have collected cash worth rupees 15,000, and from the forfeited shares they have adjusted 6,000. So the to share capital, it is 21,000, being reissue of forfeited shares at a discount of rupees 2 per share. Now they have reissued the shares at a discount of rupees 2 per share, and the discount has been debited to the forfeited shares account. Then next, they have told us they can make use of the provision for tax. So what is the provision for tax? Actual provision is 4,000. Out of that, we need only 300 rupees. So provision for tax account debtor 300, to reconstruction account 300, being provision for tax used for reconstruction. So this entry, I'll explain it next. So next we have the forfeited shares account. Now what is the balance in forfeited shares? If you can see here in the first entry, so forfeited shares is 20,000. In the forfeited shares account, we have 21,000. Then out of that 6,000 we have utilized. So 21,000 minus 6,000. What is the balance? 15,000. So that 15,000 balance. So 21,000 minus 6,000, 15,000 is the balance. So that you will be crediting it to the reconstruction account. So whatever is the balance remaining in forfeited shares account, you credit it to reconstruction account, being for balance in forfeited shares account transferred to reconstruction account. Now, in the reconstruction account, we have to just see what is the total balance. How we got 42,300. See, there is a credit of 15,000 here in the previous entry. Next, we have this 27,000. So, 15,000 plus 27,000. What is the total? 42,000. So, the total is 42,000. But when you add all this, see, when goodwill is 10,000, machinery 10,000, P&L 20,800, preliminary expenses 1,500. When you add all this, we get 300 rupees excess. So this 300 rupees excess we have taken from the provision for tax. So provision for tax account debtor 300, to reconstruction account 300. So we have taken the money from the provision for tax for the purposes of reconstruction. So now this 42,000 plus 300, that comes up to 42,300. So reconstruction account debtor 42,300. Now we are writing off the goodwill 10,000, machinery 10,000, P&L account 20,800, preliminary expenses 1,800, being the above assets written off. So we have written off all the previous losses of the company. Then next we have the balance sheet. So the balance sheet and reduce of Aroma Limited. Now whenever there is a capital reduction, so you have to write this in this format, balance sheet and write and reduced. So this is how you will be writing the heading for the balance sheet of capital reduction. Then next we have equity shares of rupees 7 each. So that is 20,000 shares into 7 rupees. So that comes up to 1,40,000. So this is nothing but this is the authorized capital. So this is the authorized capital, 1,40,000. Next, the paid up capital. So this money, you will not be adding it to the total. So this you can underline it and you need not add it to the total of the balance sheet. Then we have the paid up capital, 12,000 shares of rupees 10 each and rupees 7 called up and paid up. So this rupees 10 share has been reduced to rupees 7. So 12,000 into 7, 84,000. So this is correct. Next one is the creditors, 15,425 and provision for tax. So provision for tax was previously 4,000. Out of this, 3,000 I have reduced. So the balance is 3,700. So we have a total of 1,03,125. Now, land and building. On the asset side, land and building, there is no change. So you write as it is. Then next one is the machinery value, 50,850. So they say that it has been overvalued. So this overvalue is 10,000. So I write it as 40,850. So the overvalued amount has been written down. Then stock 10,275, debtors 15,000, cash at back 16,500. Total is 1,03,125. So this is the new balance sheet of the company. So we go to the next problem now. So let us see the next problem here. The following is the balance sheet of Ashish Limited as on 31/3/2021. Now, equity shares of rupees 10 each, 40,000. Preference shares of rupees 10 each, 20,000. 7% mortgage debentures, 10,000. Bank overdraft, 5,000. Creditors, 10,000. So these are the values on the liabilities side. On the asset side, we have plant and buildings 20,000, land and buildings, plant and machinery 30,000, goodwill, stock, debtors, cash at bank, P&L account and the total. So P&L account appearing on the debit side of the balance sheet or on the asset side of the balance sheet, it means it is the past losses of the company. So the main aim of capital reduction is to write off the losses of the company. Next, so we have the additional information here. The company got the following scheme of reconstruction approved by the court. So what is the scheme here? The preference shares to be reduced to rupees 7 rupees 50 per share and equity shares to rupees 4 per share. Now, preference shares have to be reduced to 7 rupees 50 paisa and equity shares to rupees 4 per share. So, what is the, if you can see here, the equity shares are of rupees 10 each and preference shares are also rupees 10 each. So, the preference shares has to be reduced to rupees 10. So, the value of each preference share is 10 rupees. So, from 10 rupees, it has to be reduced to 7 rupees 50. So, minus 2 rupees 50 paisa per share. And equity shares have to be reduced to rupees 4 per share. So, that means 10 minus 6, that is 4 rupees. So, 6 rupees has to be reduced from each equity share. So, this you should understand. So, whenever they have given this kind of a problem, so you can always write. So, 4,000 shares into, so it will be 4 rupees. So, that will come up to 16,000. And then for preference shares, 7.5. 7.5 into 2000. So that is how you have to calculate. Then next, the debenture holders took over stock and debtors in full settlement. So the debenture holders, they have taken over the stock and debtors. Fictitious assets to be eliminated. So whether it is the goodwill or the profit and loss account, that has to be eliminated. Premises increased by 30% and machinery depreciated by 20% and goodwill eliminated. So premises value has to be appreciated by 30%, machinery value depreciated by 20%, goodwill eliminated. Expenses of reconstruction amounted to rupees 300. So if you are given a problem like this, so better you make columns and write what is the old balance, the new balance, and then the difference. So if you write it like this, you can be able to see here what is the old balance preference, equity shares. So equity shares, old balance is 40,000. So what is the new balance? 16,000. So 4,000 into 10, 40,000. Now it is 4,000 into 4, that is 16,000. So what is the difference amount? 24,000. It is the difference amount. Next, we have the preference share here. So if you can see here, the value of the preference share is 20,000. So I write here 20,000. So that is 2,000 into 10. Then what is the new value? 2,000 into 7.50. 2,000 into 7.50. So it will come up to 15,000. So the difference amount is 5,000. Next, so the debenture holders. So debenture holders, what is the value of the debentures? If you can see here, the debenture value is 10,000. So 10,000. So they are given the stock and debtors. So the difference amount is 1,000. Then next, premises. Premises, it is increased by 30%. So what is the premises value? 20,000. So 20,000 plus 30%. So that comes up to 6,000. So the total is 6,000. So this way, if you can write this, you will get the total reconstruction balance. So whatever is the balance, that comes up to the reconstruction. The expenses of reconstruction is rupees 300. So this has to be charged to the bank account. Now we'll write journal entries for the above and prepare the reconstruction account and the balance sheet. Now the first entry is preference share capital account debtor 2,000 into 10, 20,000. To preference share capital account 15,000. To reconstruction account 5,000. So this is 2,000 into 7.50. So the paid up value of each share has been reduced by 2 rupees 50 paisa. So 2,000 into 7.50 is 15,000. To reconstruction account 5,000 being reduction of paid up capital by 2 rupees 50 paisa per share. Now, rupees 10 equity share capital account debtor 40,000. So this is the old capital. Now to new equity share capital account. So that is 4,000 into 4. 4,000 into 4 is 16,000. So the difference amount will go to the reconstruction account 24,000 being reduction of paid up value of the equity share. Next we have the mortgage debentures. So we have to first transfer the debenture value to the debenture holders account. So debentures account debtor 10,000 to debenture holders account 10,000 being debentures transferred to debenture holders account. Next, now what you are giving to the debenture holders? Are we paying money? No, we are not paying money to the debenture holders. So what are you paying? We are paying in the form of stock and debtors. So debenture holders account debtor 10,000 to stock account 5,000, to debtors account 4,000. So the difference of 1,000, I am crediting it to the reconstruction account, or also I can call it as the capital reduction account. Capital reduction account. So being issue of stock and debtors to debenture holders account. Next, there is appreciation in the premises value. So premises account debtor 6,000 to reconstruction account 6,000 being appreciation in the value of premises. So the premises value is 20,000. So they have a 30% increase. So 30% of 20,000 is 6,000. So this 6,000 appreciation, for that we have passed an entry here. Then next is reconstruction account debtor to bank. So we have paid the reconstruction expenses. So that is 300 rupees. Now in the last entry, I will just add whatever is the balance in the reconstruction account. So reconstruction account, so here we have a credit balance 6,000 plus, if you can see the previous entries, here 1,000, then here it is 5 plus 24, 29. So I will write here 29,000 plus 1,000. So that comes up to 30,000. So reconstruction account debtor 36,000, to goodwill 1,500, to profit and loss account 24,000, to reconstruction expenses 300, to machinery 6,000, to capital reserve 4,200. So whatever is the difference amount, so that you transfer to capital reserve account 4,200, being the above assets and losses written off. So we have written off all the fictitious assets, that is the goodwill 1,500 we have written off, profit and loss account also I have written off, reconstruction expenses. So machinery account I have written it down by 6,000. So this machinery account, so they have told there should be a depreciation of 20% on machinery value. So I have reduced the value. So 30,000 into 20%, 6,000 is the reduction in the value of the machinery. So the difference amount will go to capital reserve account. Now, next we have the reconstruction account, or you can also call it as the capital reduction account. Capital reduction account. To goodwill 1,500, to profit and loss account 24,000, to reconstruction expenses 300, to machinery account 6,000, to capital reserve 4,200, total is 36,000. Now on the credit side, so we have from the preference share capital 5,000, from equity share capital 24,000, from the debentures we have 1,000, and from premises, this is appreciation in the value of premises. So this appreciation in the value of premises, that is to be credited to reconstruction account 6,000. So the total is 36,000. So this is the capital reduction account, or you can also call it as the reconstruction account. Now next we have the balance sheet of Ashish Limited and reduced. So whenever there is a capital alteration or reduction in capital, we will include this and reduced as on 31/3/2020. So the 4,000 equity shares of rupees 4 each, 16,000. So this is the new capital, new equity capital of the company. Then 5% preference shares of 7 rupees 50 each, that is 15,000. So this is the new preference capital of the company. Then we have the capital reserve 4,200. So this is the balance of reconstruction account, which we are showing it as the capital reserve. Then bank overdraft 5,000, creditors 10,000. Total it comes up to 50,200. Now Here, the land and building value is 20,000. Add appreciation. What is the appreciation percentage here? 30%. So 20,000 into 30%, it is 6,000. So the total amount is 26,000. Then plant and machinery, it is 30,000. So there is a depreciation of 20%. So 30,000 into 20%, it comes up to 6,000. So whenever there is depreciation, you have to reduce the value. So the value is 24,000. Here it is appreciation. So you are adding the amount, you are getting the total amount as 26,000. Now the cash balance, so if you can see in the previous balance sheet, what is the cash balance here? Cash balance is 500 rupees. So from 500 rupees, we have paid the reconstruction expenses of 300. So the remaining cash balance is 200. So when you add all this, the total comes up to 50,200. So in this way, we can prepare the solution for this capital reduction. So whenever there is a capital reduction, usually you will be asked to prepare the journal entries and also the reconstruction account and also the reduced balance sheet of the company. So usually these three things will be asked for 15 marks. So very easy chapter. Once you understand the concept, it will be very easy for you to just make out the solution for the problem. So with this, we come to the end of this session. Hope you have all followed it. Thank you.